The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risks to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. Let's see, let me get this screen share happening. So we can kick this thing off. Let's see. Make sure that there you go. Let it catch up to me. All right. It's happening. I did a video with no screen share last week. I'm like, duh. I was real tired. It's been a crazy week in the stock market. Stock market fell, and the way that everybody rejoiced, you would think that we're out of trouble. Can't really say that. It's a little too early to tell. Okay. You can see here, this is our S&P 500. I'm really just looking at the last leg that started the final channel to the high. Okay. We're talking about the run that started August the 5th to what do we got here? September the 19th. So we pretty much have been trending down for, I guess you can call that 3 weeks, except for this little sideways move. But you can see here, it's been a channel, pretty much in a channel. So the stochastic is kind of showing us how the momentum works. It's I guess you could think of it like if you stood on top of a building and you dropped a basketball, it would hit the sidewalk or ground. It would bounce up. It would not bounce all the way back up to you, where at the point you release it from your hand. And so each retreat or reflection back up towards you is going to be at a lower point from where it started. So we had this, so this momentum oscillator was showing us that we had a big decline on this is showing us the first, okay, the first of the month to up until yesterday, okay? And so the momentum went back up to overbought, but the price didn't make a new high. So we're not out of trouble. So we're not, it's too soon to tell. It's too soon for anyone to be rejoicing. We also ran back up into an area where the price had broken through. Okay. We also, this diagonal line represents a channel that we fell through, and the price went back to that area as well. So that's a common thing for prices to retest or revisit failed price areas. Okay. And it's also quite common for those failed price areas to function as resistance to the price going higher. So we're not going to know until Monday where we stand with the S&P, but it's no time to be rejoicing. Okay. If we go lower, when this momentum goes in, this is a 30-minute chart that we're looking at. Okay, and we're looking at the ETF symbol SPY, and it represents the S&P 500. And the S&P 500 is important because it represents the 500 largest companies in America, and most essentially all of our retirement accounts track the S&P 500. So if you're in this and it's under stress, you're adding years to how many years you're going to have to work to retire. So again, this is not the time to be passive. Again, I'm not a financial advisor. This is a call for you to get free help. Talk to someone at your bank, a lot, especially a credit union. And they're good for offering free information, good information. If you're not in the credit union, you can get in one. Maybe this is a good, add this to the reasons why you should maybe consider being in one. For many periods in my life, I've been in a bank and a credit union. Okay, so that's the deal with the S&P. Doesn't look so good. So what I'm going to do in this video, the point of this video today is to kind of reinforce the idea or the point that it's one world. It's one big global economy with intercontinental, intercountry, trans-ocean trade. Okay, so things have a tendency to kind of domino around the world. And so what I want to do today is talk about that. So let's start with let's start here. Let's start with good old this is not going to be a long video. I'm going to kind of do a drive-by on this stuff. This is the United Kingdom, and what we have set, and this we're looking at a monthly chart. And this high is from 2007 to the low 2009. So you'll notice 2009 was the beginning of an uptrend for many countries, not just the United States. And so what we have here is a symmetrical triangle, and the momentum is going negative. If you just look at this horizontal line of my crosshair, if we break this leg and continue to break this horizontal support, there isn't really much stopping the price from diving and taking away all the gains from 2009. Now, I am in the bear camp, okay? But when I'm doing my charts, I fight against first of all, I recognize that I'm not objective, okay? I have an opinion. And it comes from looking at the charts a lot in different time frames, going back in 100 years, okay? In the case of the Dow, okay? And my study of the dollar and gold, and that we're talking about we're talking about 50 years. About 50 years worth of chart study. So I'm pretty bearish. And just as this UK stock market, if it breaks through this support, it's really not much stopping it from coming down here. I am of the opinion that this is a mammoth decline of with respect to the S&P 500. I know I left, but I just want to make this point on this larger point that we have been in a serious uptrend from the end of the so-called Great Depression, which ended in the 1930s, and that is in Elliott wave theory terms. I call that wave 3, and we are looking at a massive correction of that trend that's been running from the early 30s. So we're talking about almost 90 years of a trend, and that massive correction, in my opinion, it's going to threaten the lows or all the gain that we've made in our stock market since 2009. Okay, so we'll see how that goes along the way. So this is London, the UK, not UK, not just London. Um, Not looking too good. Okay, and this is an ETF, symbol EWU. Okay, what we got here is CAC 40. This is France. It's 40 of their largest companies. And we are looking at here a monthly chart. We look like we're about to flip on the momentum. They too have a trend line support, but we're good ways from it. So, I'm not going to say like we're going to break this like tomorrow. But the fact that we're flipping over right here, and I can see a 5 count right here, that's not encouraging. Okay. And we didn't make a high, didn't take out this higher high. And we're overbought in the on the quarterly chart, but that's less important, because this thing can run sideways for a while like it's been doing right here. But I don't see anything positive. In fact, this is a weekly chart. So this week we made this candlestick and it broke the uptrend. And it's pretty decent size compared to everything in it. So we're talking about since middle August. I guess that would be, dang, this is October already. This year is rolling. Okay. And you can see the, 1, 2, 3, 4, 5. Again, that's never good. And of course, there's this thing. And so this momentum, this oscillator is going to flip, or should flip. It's likely to flip. Let me say that. And then again, the same issue. What if it takes out this low? There's nothing to stop it. There's no price congestion like a big sideways move or anywhere here where that's what we look for. Previous stopping points in the price, and we would call that prior support, where the price may stop again, where people that bought in that area may come in and buy again to stop the price from falling. But I don't see anything like that. Okay. So if we fall through this floor, that means all the people that bought from here to here, so that I'm looking at from this point to this top and this whole sideways region in that channel, they will all be losing money. And the tendency in those situations is for them to sell. Okay. And especially today in this automated trading era we're in right now, a lot of computers will just sell for you, because we are emotional, and these the software, the trading software, is designed. Let me hold on a second. I was saying that the trading software is designed to trade for us, to protect us, or protect the people who use that software. I mean, I'd say us. I don't use it. I'm hoping to get to the point where I can create my own software to automate my trading system, but that the software takes the emotion out of it, because we'll sit here and want to rationalize it, where the fundamental analysis and none of the reasons we think are logical are really it doesn't work to stay in trying to use logic with a good explanation. If people are selling, you sell. Okay. It's just, well, again, this is just my opinion. You get your own financial advisor, but as a pure technical purist, I don't care about fundamentals. I sell when the market is selling, and I find out later why, or I hear the good explanations why, because you never really know. When you have to depend on man for answers, we lie. Okay, but in the technical world, there's a saying: price is truth. Price is truth. Okay, there's nothing truer than you will know than the price of what the market says the thing is worth, and the market is right. Okay, the market is right. So this is not a good sign. So although there's lots of talk about, hey, we had a big day today and the market looked like it came back. Well, no, it didn't. It's still sick. This is still a sick market. So we'll see. So that's the CAC 40 is France. Okay. So we covered the United States, we covered United Kingdom, France. This is Russia. Okay. We got another triangle called a descending triangle. Let me move this red line just for the moment. It's messing up the view. You can see it clear now that it's clearly a triangle. It's got a descending wedge on the top. And I'll clip this here for you guys to read about it if you want to. Let me put this in the StreamYard. Oh, what's happening? What's happening? I got some CR Frank. What's happening? CJH. Well, yeah, I didn't get a CJH. I didn't get a call. I thought we were gonna probably do a session this week, but didn't happen. But I understand life prevails, and you gotta take a break from this stuff sometime. Totally get it. But let's see. Let me get back. Stay on the roll. Okay, so yeah, that's the descending triangle, and this is Russia. Okay. So the descending triangle is generally a bearish pattern, and this is the peak from 2008. Again, there's rose since 2009, and it peaked here at 2011. It never really made another high since then. Just been kind of puttering along, okay, in this sideways pattern. Okay. Now Russia is one of those places that's sensitive to oil, price of oil. So oil has been in a serious destruction since like around 2007. Okay, so I think may have some bearing, but that's a fundamental argument, and I don't care about that. Okay, if I can see a correlation on the chart, then I care. Then I trade that. The rest of it, sitting around talking about fundamental stuff, that's just coffee talk. But when it's time to make money, I don't care about any of that stuff. I just look at the price chart, use my oscillators, use other tenets of technical analysis. Because again, when we rely on data from man, we lie. Okay, and then sometimes even when we're telling the truth, the data is late. Price is immediate. This is real people trading real stocks with real money. Okay, and for some of these bigger issues like Russia and France and UK, this is big money. These are like the richest, powerful. These are countries involved in this trade, and these are big money managers. Okay, managers of large accounts. Okay, so if we have to assume that they know more than us. So if I see them selling, that's enough for me. Okay, as a technical trader, that's enough. You know, it's like yeah, that's hopefully I didn't say this, but it's like if a building is on fire, you don't stick around and go, well, what's the reason? No, you get the hell out. Okay, and watching the S&P 500 in case of the United States, your retirement account go up in smoke. For me, I'm not telling you what to do. I'm saying what I do. I get the hell out. And I told everybody in my family who I think might ask me for money, I told them to get out. Okay. So there's that. And we got Argentina. Okay. So the high here was We look on the daily chart, the 9th of August, and this low was the 3rd of September. So in like a month, they lost from 45,000 down to 22. So they lost 50%. Their market declined 50% in less than 30 days. Yeah, so the 9th to the 3rd. Yeah, that's less than 30 calendar days. They lost 50%. Now, my concern is that people are not going to be paying attention here in America. I don't know if we're going to drop 50% in a month. But the point of it is, this is what can happen if you're not paying attention. If you decide that at this point in time, well, this is not that important for me to pay attention to. I'm saying this time is different. This is one of those historic times where you need to pay attention. And your statement, I know a lot of retirement accounts, you might get a statement once every 3 months. Okay, so we just started a new quarter right now, so people are probably getting their statements this week because the first of the month started a new quarter. Okay, so that's October, November, December, right? So if you get your statements once every quarter, you won't be getting another statement until January 1. This could be you. Okay, now. I'm not really sure at this moment what this thing is going to do. It looks like it could likely to head up to retrace a bit, and then we'll see when we get there. But it looks like they're going to be deeply overbought when they get to that point. So it looks like a typical ABC pattern retrace. But this is scary. There's a saying in technical analysis, definitely, that prices take the escalator up and the elevator down. This is a good picture of it. Wow. Okay. And bringing it on home is this is an ETF called the EFA, symbol EFA. And what the EFA is, it's hard to describe. Okay, it's the developed world, and it's large companies in the developed world. So it's many different industries, minus the United States and Canada. So what a lot of Americans do if they want to have a globally diversified portfolio, they might add this, and that way they will get some ownership in companies around the world that are in strong economies, developed countries, and without including any U.S. stocks, because then it would duplicate other things. So a lot of times, some folks will buy, say, the S&P 500 plus this, and so they'll, or like in I said the SPY ETF. So they may buy the SPY ETF and this ETF, and then that one, and just those two things, they will have their money will be diversified across large companies in developed countries. Okay, so that's the basis for this. Now, what's concerning is in this rise from our stock market rose pretty much around Christmas of 2018, and this again, this world just showing how correlated the world is. This world ETF minus the US and Canada, this world ETF did the same thing. It rose right around Christmas. So there's I just keep making trouble. This theory of diversification needs to be challenged. People really need to look at this, because if these world markets are so correlated. They rise and fall. They rise pretty much from a common start point, and they many of them, and then this decline from a common point. You can't. Logic dictates that you're not really diversified just because you have your money in a whole lot of different things. If those things are correlated, um, or if they all move together, let me put it that way, make it plain language. If they all move together, uh, you have a myth of safety. It looks like you convince yourself that you're safe because you're invested in a lot of things, but not really. For me, there's no substitute to knowing how to read charts, having a basic understanding of the business cycle, and having a basic understanding of sector rotation, where money goes when times get tough. With an understanding of that, that's your only protection. There's no such thing really as, okay, let me just put my money in this one place, and let me just go on about my life and forget all about it and everything's going to be fine. That doesn't exist. There's no such thing as that. You know, I call it the stupid tax. There's always a tax for stupidity. There's always a tax for it. There's no safety in ignorance or apathy. Okay, so people either have to learn how to manage their money, or they should pay someone to do it. Okay, well that's it for that. But what we see here, what's kind of discouraging, is this series of lower highs. Okay, that's not doesn't look good. Let me take a peek at the other time frame. So it's weekly. So we got a little divergence here. This, momentum is going up, but the price doesn't care about that in this case, which is strange. It's just coming down, still making lower highs and a bigger candlestick. Each candlestick is bigger than the previous one. So that means it's going down and it's picking up speed. That's but this momentum is going the opposite. Like we call that divergence. So let me take a look at the monthly. I'm sure if I saw like the week between the week, of course, is 5 days, 5 trading days. The daily chart, of course, is one. I'm sure if I had a 2 day or 3 day chart, it would look better. It would make more sense. The stochastic it would be in sync with this trend. I'm sure, likely. Look at this doesn't look good. So this is on the monthly chart. No need to get excited until this price breaks this trend line. Um, God, I got this song playing in my head. No need to get excited. Got me thinking about I don't know if y'all know this artist named Michael Hedges. All along the watchtower. I gotta play that as soon as I get off of here. Okay, we got the monthly chart, the momentum about to flip negative, which is in sync with this. So the larger time frames, of course, more controlling than the smaller time frames. All right. So that's our view of the world. Doesn't look too encouraging. Does not look too encouraging. And this decline also started in 2007, and rise started in 2009. So you see all this symmetry globally, okay? And people still think that they can be diversified just by investing in a lot of stuff. No, no. You gotta learn how money works and where it flows. And we talk about that on my Patreon. Consider joining the Patreon. It's not $2 a month, it's $10 a month. I can't give this away for free. Um, This information makes you money. So it's more, and the market value for this kind of trading education that I'm sharing on my channel will cost you thousands of dollars. And most of the places that train you, they'll give you a book or a video series, or you'll be in a class that might last a month or a couple of weeks, and then they're done with you. Um, the problem with that is this stuff takes a while. It really does. And you can't run a trading business holding people's hands, letting them learn at their own pace, because you could be stuck with them for a year. Because the truth of the matter is, you're not going to read a book or watch a video series or sit in a class for 2 or 3 weeks and then you got it. No, it takes repetition, and that repetition should really come with someone accompanying you, someone guiding you as you're doing it. I've been trading for, oh God, 30 years. I've been tech trading technically. I was a fundamental trader prior to the last 10 years, 11, make that 11 years. I've been a technical trader since then. I did not have a teacher, a mentor. I didn't know anyone. There was no there was no social media when I got started. So I would be a lot further along if I had the information and options you guys have. I would gladly have paid someone $10 a month, you know. Especially since back then, giving them. I mean, I lost the equivalent of a Mercedes-Benz S-Class, okay, in money, trying to learn, okay. So yeah, I would have gladly paid someone money to 10. Especially, God, we talking $10 a month. Oh yeah, God, yes, $120 a year. I don't even know if you can buy a pair of Jordans for that. I think if you add up a year's worth of money, I'm sorry, movie tickets, it costs more than that. Your beer budget costs more than that. Your weed budget costs more than that. So if not me, join somebody's site, learn this stuff. Get your generational wealth game on. The good part, and there is a good part to this decline. If prices take the elevator up, I'm sorry, the escalator up and the elevator down, that means you can make a lot of fast money as this market is declining. A lot of people are going to get destroyed on this decline. A few people are going to get rich. Okay, a few people actually. This decline is going to make some people rich overnight. Let me take a peek at the chat. I don't want this to go too long. Let me. Okay. Okay. CC says, how does the franc move in relation to the U.S. dollar? It moves opposite the U.S. dollar. That's why, I'm always talking about the dollar's franc. It's like a seesaw. The dollar is on one side of the seesaw, the Swiss franc is on the other. And whatever the dollar does, is however it moves, the Swiss franc moves the opposite of it. In fact, I'll put the U.S. dollar on one side of the seesaw. On the other side of the seesaw, I'll put the Swiss franc and the euro. Okay. They really are very strongly negatively correlated with the dollar. Okay. And on that side with the Swiss franc and euro, I'll also put gold and oil. So meaning energy and metals. I'll put that on the same side of the seesaw as the Swiss franc and the euro. So if the dollar is going up, all of those things I just mentioned tend to go down, and vice versa, and the opposite. So I teach Alvino Allen. Yes, I teach forex Prince, it's all related, but I am forex focused because, um, as the saying goes, forex is the dog. The stock market is the tail. The forex market is many times larger than the various stock markets. Uh, Currency movement, especially those currencies as they relate to U.S. dollar, that that's the most determinative thing about what's going to happen in the stock market. Uh, and of course, currencies around the world. In fact, that's why I go by the name Dollar Will, because my trading focus is the U.S. dollar, and I extrapolate from that how it affects the stock market. Okay, so yes, I teach forex, and I teach stocks as it relates to forex, because you need to learn about the dog, you know, more than you need to know about the tail. So I think we should major in the major, not the minor. So it's the currency is the deal, you know. So what's up, Devin Niggins? Okay, um, CR Frank. All right. I got you. I got you. CC. The Swiss franc. Oh, you you mean the French the French franc. What is that? What is that? I gotta look that up. We gotta talk about that. I gotta. Let me see. Your question was, uh, how does the French franc move in relation to the dollar? My answer is, CC, we'll talk about it. We'll research it. Okay. Okay. I had never heard of a French franc, to be honest with you. Um, but I'm looking at Alvina. I'll sign up. Yes, yes. And if you got anybody that want to, you think they need to just at least check out this channel, even if they're not really ready to join me on Patreon. Um, send them, get them hip to this channel. I don't post videos every day, frankly, because I'm looking at charts all day. I'm doing, CC can vouch for this. Um, I'm doing this every day, you know, and for a good bit of time on weekends. And I'm like, I'm done. It's like, by this time of the day, I'm done. I don't want to think about stocks. I mean, I'm on to something frivolous, in life, to try to like reboot. But when I do post a video on my channel, it's because I think it's something that people need to focus on. So I'm gonna try to increase the amount to maybe 3 times a week, because I've gone weeks without posting a video over here. But I'm gonna try to get better, and maybe bring it up to maybe 3 videos, maybe 3 videos a week. Because I'm still stuck in the 300s. So maybe that's why I don't have the motivation to do it. But the enthusiasm of my small Patreon group, and that's another benefit to the Patreon group. It is small right now. It is small. So it's a small enough number that for your $10 a month, you will end up having personal training from me, one-on-one. Sometimes it's with other Patreon members, but most of the time, because everybody's busy doing their own thing, it's one-on-one. So it'll be a hangout, pretty much just like this, and it'll be me showing you with the screen share, and then at some point in time, you will have to show me to repeat back to me the process. Okay. but it's one-on-one. You get to ask whatever question. I'll focus it to whatever it is you like to trade. I have there's a person in the group that likes to trade penny stocks. I don't trade penny stocks, but technical analysis applies to all of it. So when I'm talking to him, I talk penny stocks, penny stock charts. There's another person in the group that likes to trade a couple of cryptocurrency like XRP. And when I'm talking to that person, I know that that's what their focus is. And so I can break down those charts for that person. So it'll be, customized. Then there's some people that want to just be a swing trader. That means they just want to get better at managing their retirement account. Okay. Then there maybe, another person may have an interest in being a day trader, you know, getting better at that. Now I am a swing trader. I'm trying to get better as a day trader. Uh, I'm aiming towards working towards a goal, which I hope to take some of my Patreon members with me. I don't want to share that right now, but let's just say I have ulterior motives. When they get better, I'm gonna really blow their mind about what we can do with this stuff. Okay. Oh, and you say Alvino Allen, you're mostly focusing on gold, okay, and the British pound, Japanese yen, okay. Yes. So by me being a dollar uh, centric trader, the two things that I watch, I say 80, 90% of the time for me, for myself, okay. Not when I'm looking at something for, say, someone on Patreon. I'm watching the USD CHF, USD CHF. That's US dollar, Swiss franc. I'm watching that chart all the time, and then I'm also watching XAU USD, which is gold versus the dollar. And when I'm trading in the stock market, I take that information, and I also put up an oil chart. So just from that little bit of watching those three things, I can go make a gold trade, or let me say a metals trade, okay? Because there's a great deal of correlation between a lot of those metals, okay? So usually I can find, if I see the dollar doing, at say a peak or a trough, and I know those other things trade opposite the dollar, I can usually find something in, say, a copper stock, a gold stock, a silver stock. I can usually find something. I can find an oil stock, a natural gas stock, um, and those things are explosive because the world trades, consumes those things. Okay, and so that's uh that's what I do. So let's see. If you signed up to the Patreon, let's see. Then we're gonna be in touch because I require everybody that signs up. We gotta have you gotta have a personal sit down with me. I gotta learn what you're really interested in, so that I can then make sure that I focus on what you're paying for, what you expect. Okay, give you what you're here for. You know. So welcome aboard. Welcome aboard. So you'll be getting a, note from me, and basically I'm going to be asking you to think of a time of when you want your first private hangout with me. And I'll give you the quick. All right. Is there any other questions? Anything else from the chat? I'm gonna shut it down, and I'm pretty positive I'll be making another posting tomorrow. Uh, I want to talk about tomorrow. I'm kind of burned out tonight, but tomorrow I'm pretty certain I want to talk about housing. and I haven't even looked at the bond yield chart, but it was close to a break, to a breakout. So I need to look at that. So I'm likely, more than likely, going to do something tomorrow on bonds, housing market, because there's some interesting things going on with that. DH Horton, is that it? Yeah, DHI. That's the largest market cap real estate, I would say home builder. Uh, so I kind of peek at that too, because the dollar is related to the interest rate, and the interest rate is related to ability to qualify for mortgages. Okay, so if people can't qualify for the mortgage, that's going to slow down home sales, and that's going to crash the real estate sector. Now, from 2009 to now, the most um, impactful, prosperous sector has been real estate. So, with me, and I'm going to show you guys how to break it down. Look at the different sectors. Look, we call that breadth. I can't say that word. BREADTH. I can't. I can't say that, but now I spelled it. You know what I mean? I'll show you how to break it down. Look at the different sectors and industries which make up the market, and we can, that's important to do, to know where the money is going. Where did the money leave? Where is the money going? And we just follow that train. We don't, other than other macro issues relating to the dollar. Like I said, we don't really know on a day-to-day basis why people do what they do. I don't buy the arguments that Trump made a tweet and people ran to the computer. I mean, have you ever run to your computer to make a trade, get out of a stock because the president made a tweet? I think that's silly. But that's technical analysis. We don't we don't get into that stuff. We just watch the money flow. But I'm gonna chime out. Thank all of you for riding with me. Thank you, Alvino Allen. I will be in touch. Uh, Peace.